got so much ground to cover, so we'll do our best because I'm sure there's a lot of hungry mouths to feed out there in terms of your views on the global macro pictures. But I kind of wanted to start with uncertainty because it's almost become a given recently in terms of market volatility, geopolitics and the remainder. Ray, from having heard you many times on the stage, I know that's not a surprise to you historically because we've seen these cycles before. But perhaps to share with the audience, what is the single most important principle you think that investors should be focusing on at the moment?
Diversification.
Yeah.
I think that investors think too much with in nominal return terms, not in real return terms. I think they think in a traditional, what is a storehold of wealth, and they think, for example, a treasury security is an effective storehold of wealth. And I think that by studying history, that includes all of the swings of history, going back ideally many years, but let's say if you started in 1960 or whatever, and to see how these changes take place. I think that also the diversification is important because to be able to make tactical decisions to beat the markets are not what most people are going to be able to do well. I put in hundreds of millions of dollars to try to beat the markets, and it's a zero-sum game almost. So to know what you don't know, particularly during a time like this of great uncertainty, diversification so that you know how to maintain or improve your buying power no matter what happens is the most important thing.
Yeah, we kind of heard in the last few years that cockroach approach, which a lot of people are very keen on. And we'll come back to a bit more of a macro picture in a second because it's absolutely fascinating to discuss those traditional stores of wealth. But Bill, I want to come through with you in terms of single principles that you use when it's a bit of a hard question really, trying to make those big decisions. Is there any sort of go-to that helps you sort of navigate?
Many go-tos, but it's always just reflecting on Ray's appeal for diversification, which of course is completely correct. I think that's also clearly coming from the perspective of an investor. We're a bank, and as a bank, we tend to focus on the downside. So diversification is key in terms of protecting against downside risk. It's also very important to understand what the tails look like. So we try to approach every challenge or every question by understanding and being quite clear what our base case is and investing on that basis, understanding what the tails are, what are the adverse or positive scenarios, how dispersed are they, and what does that mean in terms of the built-in resilience that we need to establish for ourselves so that we can withstand. Banks are leveraged entities. We have to be able to withstand a severe shock. In fact, banks make the biggest leaps in terms of their strategic positioning during crises if you go into it strong. And if you go into it weak, you don't come out. We've seen that time and time again. So the North Star for us is be very clear what your base case is, but be as clear, if not more clear, with what the tails are and decide what you want to do to prepare for those tails.
Yeah, the heat of the spotlight when a crisis occurs is very heady indeed. And I want to pick up on both points that you mentioned there, and that's the role of data. Of course, it's a given in investment decisions. But Ray, as you were alluding to there's so much data, and sometimes you've got to pay a lot of money for that data. Are people overwhelmed with data? I mean, obviously not big organizations, but the individual investor. And is there any time that both you and Bill use gut instinct alongside that data?
Of course you would be overwhelmed with data. So I found something like 35 years ago, I started Bridgewater 50 years ago, and something like 35 years ago, I had to write down each of my criteria for making decisions when I would make those decisions. And then I would put them into algorithms, and I would get data, and I would test those decision rules, and I would build systems. And what I found is that by using the computer and earlier forms of AI, and now I find it better than ever with current forms of AI, I'm not limited by my human brain to be able to measure and deal with complex situations, because, it's the butterfly theory, and it's true that if something's happening here and there, and then the interrelationships. So I think the days of weighing things in your head and thinking you're going to be competitor are past, and that using AI as a partner, not a substitute for your own thinking, but for using it in a way where you can ask any question, you can deal with any interrelationships, and that it works in that way is essential for competitiveness in all aspects. So it's not just data, it's having a proper AI partners that can do what you can't do, because they can deal with so much more data. They can deal with so many more complex relationships. You can systemize your decision making and see how it would have worked throughout history to stress test it, and you can deal unemotionally. So the building of that game plan and doing it in that way is the way that's essential.
But that sifting is at speed, which can be a double-edged sword, because the markets are whipsawing around and moving quicker and quicker, it appears, than ever before. So is there a role for gut instinct, Bill, or just purely the data?
I think you should really avoid relying on gut instinct. As Ray says, you start with data, but we always have to apply judgment. And judgment and gut instinct aren't the same thing. Judgment is taking the data and understanding data, and we're using the term very broadly. We're not talking about data points. We're talking about a stream of objective facts, and then applying judgment to those, how you weight one source versus another, or one suggested outcome versus another. And the data or the analytical basis for a decision will take you to one conclusion.
Yeah, just picking on that point and making it clear, the criteria that you're making in your decision, the intuition, the gut, is something that increasingly, I've learned this from many decades of doing this, is something that can be articulated in principles that you can write down and you can test. So a lot of that which you are thinking is intuition or common sense is invaluable, okay? But to cross the line, to take that and use that as the basis of articulating it and measuring it so that you can bring it to that level. And there's no doubt that you cannot go to the computer and trust the computer, okay? And when I say it's a partner, it has to be something where you're stress testing essentially each other, and you say, that's right. I may not have seen it because of the interrelationships and the complexity of those things, but now as we're looking at it, that's right. Never let the computer or the AI be something that you follow.
This is a really interesting conundrum, and Bill, I'm maybe going to lay it at your door as well, but yours too, Bill, is that the sense that we use AI, and friend or foe to the markets we can discuss, but having the background knowledge to assess whether it's giving you the correct information is something I think people take for granted, because, I'm getting on, we're all of an age where we've seen quite a lot of risk in the markets. There is, maybe it's unfair, a perception that people under 35 don't understand real risk. Do you agree with that? And is there a worry that people's experiences aren't enough to pull apart what they're seeing in front of them to be able to assess it?
Well, for me, I think that there are so many people who are so focused intently on little bits and pieces of the whole system. We have specialists. We're going to talk about the world. There's a monetary order and problems. There's a domestic, for all countries, political problem and situation. There is a geopolitical. There is nature and there is technology. And they're all interrelated, all of it. So there's enormous complexity. And people don't have either a historical perspective on these things. I think much of what's going on now is very much like the 1930s in terms of its cause-effect relationships. But anyway, they don't have enough. And everybody's so specialized that it gets very confusing. So I think yes, you can have remarkable expertise in an area, but actually bringing that together and putting it in a historical context and understanding what's going on everywhere is a challenge.
To the age point, I think sometimes having a mind that's less cluttered by facts that may not be so relevant is extremely helpful. You see, some of the most valuable companies in the last 10, 15 years have been created by people who are still under 35 years old. And it's not been because the world's been nice and calm for the past 15 years. The world's been in different degrees of tumult, especially in different parts of the world. So I don't think it's an age thing at all. I think it's a clarity of perspective thing. And people who are successful today are using, as Ray started off, the data that's available, digestible in ways that were inconceivable to me when I started my career, but have become much more so through time, and have kept a few North Stars in terms of the things that when it comes to applying judgment, those North Stars that they're using to drive their vision forward. And sometimes it works, sometimes it doesn't. But the great successes have been people that had a very clear North Star and then informed by everything else that's teed up for them in a way that it's never been teed up before. So I don't think there's an age issue at all. In fact, if anything, I think those of us that have been around for a while may be stuck in our ways and not using all the tools that are or data sets that are available to us in the most effective way.
That's a particularly important point because we were just talking about a number of things, including war and all of these things. And I think that there's a mindset now that is based on a memory of the last, let's call it the post-World War II period, 1945, the existing order, and that order is changing. And so you could be biased by, most people are biased by their experiences because they haven't gone through the earlier experiences.
So let's talk. We as you said, we kind of went micro before we went micro before we went macro. But let's zoom out a bit because you touched on some important things there. I kind of alluded it to in market volatility. But I know you've talked previously, Ray, about the five forces in great length. But maybe for the audience that aren't familiar with that, these are the things that are really shaping the future the most. Which one of those five are you particularly focusing on at the moment, or is there just the whole lot together all the time?
There's an interrelationship. Okay, I learned in 1971 when I was clerking on the floor of the New York Stock Exchange, and President Nixon on August 15th got on the television and said, money as we know it is ending, and we're not going to give you the gold because, and that was money. And then I was surprised when the stock market went up a lot, and I'm clerking on it. And I found out the exact same thing happened in March of 1933 with Roosevelt on the radio making the exact same announcement for the exact same reasons. Okay, so what I learned and what I see in studying history, including that before my time, we've never been through wars before. We've never been through a monetary breakdown of the system. I've learned that there are, by and large, I studied the last 500 years of history to see the rises and declines of reserve currencies and so on. And what that shows is that there are five main forces, and I'll be quick. There is the debt money economy dynamic, the mechanics of how that works. There's the internal political, the left-right, increasing polarization dynamic that is connected to the economic. There is the third, which is the geopolitical dynamic, which we see all around us, and that changes everything. The fourth being acts of nature, and the fifth being technology, and they all interact. You can't look at them independently. So countries fight an economic war before they fight a military war. So we're in a economic war, trade war, technology war. We are in those wars. And then we have the question of the military war. So I can't say that one, but I will say that from my judgment from studying this, is that all orders can break down. So you have a monetary order in which basics, what is a storehold of wealth? What is a bond? And what is which we're dealing now with your first question of gold and so on. So anyway, they're interrelated in that particular dynamic that history paints many times over. And sometimes, for me, it's a lot like watching the movie happen over and over again. And the only thing that changes is people's clothes and the technologies they're using, but it's the same basic story.
Let's go back to that $1 gold, because there's a lot of talk at the moment for the reasons that you've alluded to there, Bill and Ray. I'd like your opinion on it as a safe haven. Gold, again, some even saying crypto, dare I say it. What's your view on the dollar as a safe haven at the moment versus gold, and maybe views on crypto?
Well, I just go back to the thesis of diversification. I think people have concentrated their portfolios in U.S. dollars for a few decades now, and they are diversifying. Perhaps because they've got concerns about the dollar, perhaps because they want to be more diversified. There are geopolitical challenges as well. The dollar has been weaponized as a mechanism to enforce policy actions coming out of the U.S. and allies, given the privileged position of the U.S. dollar. That is a challenge. Countries like Russia or China will react directly to that because they feel directly threatened. Others will just look over their shoulder and say, maybe this is a little bit better reason to be diversified. So, but is that the end of the dollar? Of course not. I mean, the dollar has tremendous underlying advantages in terms of deep capital markets and very strong rule of law in the United States, and support from an independent Federal Reserve. Long may that continue, etc. So I'm not worried about the dollar, but I do think it's quite natural to diversify not just your dollar holdings into other currencies, whether that's gold, which is another non-fiat currency, or Bitcoin, which is another non-fiat currency. As we know, gold is now a bigger component of central bank reserves than the U.S. dollar, right? And that will probably continue until we get to a diverse portfolio. There aren't that many alternatives. But it's also the payment rails that are set up. The system of global trade was substantially based on U.S. dollars as recently as 5 years ago. China now denominates the majority of its trade in RMB. It's not because it's a reserve currency, and it's not because people are dying to have or use RMB, because it doesn't have the same usefulness as the U.S. dollar today. It's because people want to have an alternative, just in case. And that, I think, we can expect to see continue to develop.
We emphasize diversify. And so just on the basis of that, a well-diversified portfolio would have somewhere between 10 and 15% in the portfolio of gold. If you didn't know anything, you would have that amount. And it's an alternative currency that is uncorrelated with other assets, because when you have a crisis of that sort, it tends to go up a lot and the others go down a lot. So from a diversification. But money it is debt, and debt is money. And what I mean by that is when you hold a debt instrument, you're holding a promise to receive money from somebody. And when you're holding money, you're holding it in a debt instrument. And money is supposed to be both a medium of exchange and a storehold of wealth. And what we have now is a supply-demand problem, because the world is abundant in debt, and one man's debts are another man's assets. And so when you're holding it as an asset and a storehold of wealth, there is a problem going on. That's why history has gone through these big cycles of sometimes there is a fiat currency, and sometimes then that doesn't work so well, and then there's more the not-fiat currency, of which gold is the main. So we do have a supply-demand problem, and we have those issues. And then, as you were pointing out, there's a geopolitical problem. Whose money do you hold? If you're China, and you could go to war with the United States, and you're holding their bonds, and you study history, you remember maybe that the Japanese did that, and that didn't work out so well for them, and the Russians have recently done that, and that didn't work out so well. And so there's the need for that kind of diversification. So it's true for those countries too. So for those reasons, I think people should consider what is a neutral portfolio, and don't be so biased toward the regular debt and the regular assets, and overlook the possibility of having a decent, an appropriate amount. Are you short of that well-diversified number?
Yeah, I mean, I believe you used the phrase the US is heading for a debt-induced heart attack in the next 2 to 3 years. Do you think the market valuations are over or underestimating that today? I'm just thinking about the tariff lifeboats that people are talking about, the extra revenues coming in. We know on an economic basis that's a separate discussion. But is that going to help at all or not?
I'm sorry, what's that?
The question was that you were saying that the US is heading for a debt-induced heart attack. There's various people saying that the revenues coming in from tariffs is maybe helping that situation.
Oh, it is, yeah.
As I said, we can discuss the economics behind that another time, but do you think the market is overvaluing that or undervaluing that at the moment?
The United States spends now $7 trillion is the budget, U.S. government. It takes in $5 trillion. So it's spending 40% more than it is taking in. It can't cut those costs for most of those reasons. They're obligated. The tariffs, we don't know exactly, but let's use a number of $500 billion. I mean, it could be, if you take those numbers, they're good numbers in terms of bringing in elements of tax revenue. There's merit to that. But the issue of the supply and demand seems to me, as I do the calculations, and I'm never sure I'm right, but I do the calculations, is problematic. So how it happens, we can't say. And when I say an economic heart attack, I just don't want to be evocative. But what I'm trying to say is that the system, the credit market, the capital market system, works like a circulatory system in which if you bring credit, you're bringing buying power, which is like nutrients. And then as a result, if you put that into investments, let's say, or activities that produce an income, it's healthy. When it doesn't, then the debt service starts to build up like plaque in the system, and it squeezes out other spending. And we are seeing that happen. We, like a doctor watching, you could see that happening in the squeezing it out. And then because of the circumstances, geopolitical and so much, there's a supply-demand problem. So you would have to, a doctor would have to say, I have to give you this warning of what your condition is and that you are at risk of a heart attack of sorts, a debt crisis, a dollar debt crisis. So, and it's not just dollars, it would be other, the British pound and European currencies and so on, because they are in somewhat similar situations.
So, Bill, I don't know if you want to jump in on that, if you have any.
No, I only observe, because, of course, the UK and France are in similar situations, but the market is providing a much more severe constraint to their ability to expand their debt base than the market is allowing the US. Then the question becomes, for how long? And up to what point? I think I live in London. I think if you're sitting in London right now, the incremental 5% of debt to GDP feels somewhat existential. Whether that it's the case or not, only markets will judge at the time if we get there. France, similarly, given that the political instability there, there's not the same anxiety in the U.S. The 10-year note is trading at 4.1%, which is at a lower yield than it was a week and a half ago. So there's no sense of the market saying, basta, and we're not going to let you go any further. But that does not extend indefinitely. The big question, I think, of our time is, when do we start crossing that line from what may be complacency into what may be real concern? I don't feel like we're very close to that in the U.S. at the moment, but as we know from history, these things change very quickly.
Yes, and that ability to see what's in front of us is sometimes quite hard. And Standard Chartered has been sat there in the middle of the East-West transition of finance for a very, very long time. And here in Abu Dhabi, of course, we're seeing a lot of benefit from the exchange and the move of that. What's your view from that standpoint in the history of your bank?
But we have our whole management board here in the Emirates and in Abu Dhabi today, in fact. And we've been here for the week. It's our hub for the entire Middle East and Africa. We're probably the largest international bank operating across the region. And we absolutely see the United Arab Emirates, Abu Dhabi in particular, as a nexus for flows of intellectual property, flows of money, flows of trade, with especially the ports in Dubai and Abu Dhabi. It's just a very, very special place to be. Of course, they've been quite adept at managing neutrality as well, very close to the United States, but also have good, healthy relationships with neighbors and then further afield. So the UAE is in an excellent position to benefit from the shifting geopolitical tides. Yeah, if the tide goes out, every boat sinks. We know that, or at least goes down. As I think the UAE is also quite prepared for the downside. So back to my earlier comments about having a base case, which I find the leaders in the region are exploiting in a very, very thoughtful way, but also understanding what the tail risks might be and making sure that you can survive those in good form. I see that preparation as well.
And Ray, obviously you've been based here a very long time as well, and you've seen many changes like other markets. Do you think as well the speed of change we see here and the open-mindedness to embracing technology and various other things is helping us create organisations of the future? It used to be an exporter of wealth from here in Abu Dhabi historically, and now we're seeing it as a great importer and exporter of wealth. And is that partly because they are creating these organisations of the future?
Yes, but I also go behind that. Who and why are they creating it? And it comes back to basics. It comes back to culture. I've been coming here for 32 years, and I've Sheikh Zayed and the values, and I would say culture matters a lot. And what you have here is the most important basic things that I've seen have been ingredients for successes of countries throughout history. And that is, do you raise your children well so that they're well educated and civil with each other, so that they can be productive and that they can be civil with each other to work well, okay? Do you earn more than you spend? And do you handle those finances well? We talked about investing. If you take in money and you build good investments, and this is not a country in which they chose to live on their wealth and so on. You look around you and you see how they invest here very well for the development, the intelligence. And I will emphasize the word of intelligence and capabilities that exist here. And then also, are you at risk of a war, either a civil war of some kind or an international war, or can you play that neutrally and navigate yourself through that? These have been determinants of countries' successes throughout history. So the elements of that culturally exist. So that's the power behind, the money. Think about the inventiveness that has had to occur here. And the organization and the capabilities. You can have a lot of places where there's a lot of money, but you can't pull it off. Okay, so look at what's actually being created. So here is, I'm here for those things, and also the brightness, the future. Think about what's going on with artificial intelligence here, and so on. These are the elements that you can maybe look beyond when you just see those changes. No, there's the evolutionary forces of those changes, which is something like raising your children well, good parenting and raising your children well.
Yeah, it's amazing how it comes back to the basics as well as into the future, as you talk about AI. Built on solid foundations, I suppose, is what we're saying there. I can't finish this interview with asking you both about climate, because that's what we've met before on previous stages, talking about the impact, and of course very dear to your heart as well, Ray. Maybe Bill, if I start with you first, I know you're almost weaving it into your new branding, that best is not good enough or something to that effect. But you have said that investment in sustainability needs to come with a return. To talk us through that philosophy and how you're standing as Standard Chartered.
Our philosophy is very simple. First of all, we operate across Asia, Middle East, and Africa, obviously important operations in the U.S. and Europe as well. The markets in which we operate will be the most exposed to rising temperatures, whether it's through 2 weeks of 50-degree plus heat in central India or the 19 coastal cities that represent 70% of our business. So we're exposed in the first place. Second, we have to think about future generations, and the future generations will be severely compromised by by rising temperatures if we don't do something about it. So we know what the right thing to do is, which is to use our forcefulness as a financier to help our clients transition to a low economy business model. It's the right thing to do. There's only so much of the right thing you can do if you're not getting a return on it someplace. So we took the view that we're going to do the right thing and we're going to make money doing it. So 7 years ago, we set out a bunch of policies. We said we are going to be a thought and action leader. Thoughts are policies, articulations. I spent a lot of time trying to reinvigorate the international carbon market. I've not succeeded to the extent that we wanted to. I will not give up because I think we need a proper price for carbon. Carbon needs to trade in a transparent way so that everybody can attach themselves to that market and measure their own progress. But we're going to do the right thing, but we're going to make money doing it so that we can take the proceeds and continue to reinvest in our business. So we said 3 years ago, we'll make $1 billion from zero in our sustainable finance business by 2026. We made $1 billion last year. We'll make more this year, despite the somewhat backing away from the climate agenda in some parts of the world. I can tell you most of our clients are as engaged as they've ever been, and we will make more money in 2025 than we did in 2024, and we'll make more money again in 2026. I don't want to sound too grubby and mercantilist, but I'm quite proud of the fact that we're able to do the right thing and make money doing it because it means that we can continue to invest in what we know is right.
And I think that's an important conversation because people seem to think it's one or the other. It's almost charity, but it's good to see that we're moving beyond that mindset. I know, Ray, you're very passionate. Ocean X is one of the sort of major foundations on which you show your care for the environment. But where are you seeing in terms of investment? As you said, sometimes there's been a little change in perspective, maybe from some organizations in terms of their investment in this part of their business.
I just want to echo what he's saying. Climate is a huge issue in terms of just if you take the economics of it. There's if you don't deal with it, what's the climate damage? There's the how do you prepare for it, and that's expensive, or how do you fix the damage, and that's expensive. All of those come out to something like estimated $8 trillion a year, $6 trillion a year. World GDP is $100 trillion. This is an expensive, high-impact thing. And then I watch well-intended entities think we should do this and make the investment in it, and not practical, in which they're asking themselves who has what amounts of money and what are their motivations. Mm-hmm. So they may think a bank has got a lot of money and you should do this, or a government has a lot of money and they should do this. Well, a bank has got to make money. Money comes in, got to make a profit of that, and you get a margin. It's not like that. Or a government has to, money comes in, you have to spend it, and you have to get there. And so and I do a lot of philanthropy, and it's double bottom line. You have to think about double bottom line. How do you achieve that? And the fact that you can think about that, for example, who's got the money and what are their motivations? Biggest pool of money is institutional investor money. That's how they've got the money. Now, if you make that economic for them, because they have to take care of somebody with that money. If you make it economic for them, now there's so much inventiveness that is going on. This is an area for, I see it, great venture capital, great investment opportunities if people are starting and institutions are starting to think about how do you do that. So building up an industry that has double bottom line. What Bill Gates did with Breakthrough Energy is a very good example. He created a double bottom line fund to invest in these things. And it's provided a terrific return for his investors and a terrific impact. So I'm agreeing with you. It's got to be that double bottom line. That's the only way. And it's going to be a big, expensive thing because we're not going to make a huge impact on this. If we're seeing what's actually happening, we're going to have those kinds of changes that you're talking about. And then when we have those changes, now you're dealing with what they mean for us, and then how you diversify your portfolio and all of those other things we're talking about.
So I'm going to bring it to a close now, because I think we've covered a lot of things. We could sit here all day, as we know, because there's just so much to discuss. But I actually want to end, as I often like to, on people and leadership, because it's the people in charge of these organisations and institutions that make the decisions. And sometimes I think humanity gets a little bit lost in terms of organisations. So if you were thinking of a question that every leader should ask themselves, I'm particularly partial to communication, or how people communicate within their organisations. But what's one of the key skills they should have, and what kind of questions should they have? And do you think communication should be one of those?
Yes, but I think you have to go to the higher level, like, what's it for? Meaningful work for me, meaningful work and meaningful relationships. What are you on a mission to do? And how do you work together on those, because you're spending the time together, and are you on a mission? So people and culture. What's your culture and what's your mission has got to be top of mind, and can we agree on those things? I think that's most important.
We run organizations which are collections of teams, and in aggregate, it's one big team. And but every member of that team is an individual. So I think the leadership is about finding the right ways to understand the individual and understand what the common purpose is, so that you can get the most out of the team. Because the collection of individuals is rarely the best outcome. Some people have found a way to master that to some degree, but mostly it's the value that comes from aggregating those individuals into a team. So I would say that the key attributes of leadership are curiosity, so really understanding the individuals, and empathy, understanding where they're coming from, but then applying that back into a team, and getting more out of the team than the individuals could ever produce alone.
When we talk about that, though, and we talk about culture, I think that the organization, like your organization, has to know what its culture and where it's going, and sort people, because if they don't want to go where you're going, so it's not just listen to what they want.
Oh yeah,
it's where are you going? Let's say the country here, when we're talking about it, where are you going and how are you with each other? Right, as at the end of the day, and get rid of the people who aren't on board for that.
And it's fascinating when you look at organizations that have done extremely well, Bridgewater not least, and say, what's your North Star? The members of the team can answer that question. And when you look at organizations that have lost their way, and you ask the individuals, what's your North Star? I guarantee you 9 times out of 10, you'll get different answers, or no answer.
And Ray, you're well known for asking the best questions. As you said, a lot of people focus on answers, but asking the best questions is one of them. And ruthless transparency. Did that ever get you into trouble?
Does it ever get? Quite often. But is it worth it? Of course. And let's say, yes. My mantra is meaningful work and meaningful relationships through radical truthfulness and radical transparency. And so on the radical truthfulness and transparency, if you don't know and can't agree on what's true and what the motivations are, you are going to not have a sound foundation about what you should do. And so being truthful about strengths and weaknesses and so on, and what each other's thinking, and then trying to work it out together to get at what is true about strengths and weaknesses and what should be done, is a fundamental thing. But in many cases, people don't want to do that, and they will talk behind each other's backs in negative ways and so on, which is counterproductive, not productive. And transparency is also something that means that things are clear. So when you can then trust in the honesty and the straightforwardness of people with each other, so you know that you can rely that what I'm saying I believe in is truthful. And that is a fundamental ingredient to all good relationships, I think. Now, it may be difficult to get through, and maybe, sometimes I might say my wife asked me if that's okay. I don't. Does it get me in trouble? Sometimes it gets me in trouble, but it's worth it.
Yeah. Okay. Well, thank you for being so honest with those replies, because I think it's really important for leadership to understand, and for those around them to understand what's on your mind, and as you said, what direction they're sailing in. So, gentlemen, it's a great honour and a great privilege. Thank you so much for joining us today.
Thank you.
Round of applause, please, for Ray and Bill.